Bitcoin is continuing sideways into the weekend. With volatility and overall volume being quite low, this does indicate a period of consolidation, usually before the next directional moves. In today's video, we're going to be talking about all of that, as well as the total cryptocurrency market cap and the difference between Bitcoin and altcoin performances throughout different phases of the bull market. Let's go ahead and dive into today's video. Okay, welcome back to the channel, MegaWhale team. Thanks for tuning into today's video. We're going to go ahead and take a look at Bitcoin today and talk about the price action on a smaller time frame. We'll look at the larger time frame, and also we're going to go over the difference between performance for altcoins and Bitcoins on average at different phases of the bull market, bear market, and of course leading up to the bull market. Now, if you've got any questions, leave them down below, smash a comment button and leave your comment. I'll usually go through and answer all these comments. Make sure you like the video to show support to the channel. Of course, if you're new to the channel and you want daily objective technical analysis, we focus on nothing but the charts, structural analysis, and technical analysis on this channel, this is a place to be. Go ahead and click that subscribe button. Now, of course, you can get access to our Telegram channel. The second link in the description will get access to all of our videos, charts, analysis, information, updates, and so much more, guys. And if you're interested in our VIP channel, we actually have a 20 to 33% off sale right now for our memberships. You can go ahead and click over here to find out more information or find a VIP trading track record over here. For example, we'll click a random month. There are our results from July. Let's go ahead and dive into the video. So we'll start off with talking about the general market data, and then we'll go ahead and do the rest of the analysis. So we're looking at the monthly for Bitcoin, negative 18.84. Again, the last 10 or so days, we have been moving in about a 10% range. We've been moving in quite a tight range, and this range is getting tighter and tighter and tighter. As you can see by the price action here, we have been consolidating for quite some time now. We've had a few breakouts, okay, a couple fake outs each direction, pretty extreme fake out down over here to about 15.5k. where we did retest the support line over here before we bounced up, and we're currently up around 7%, 7 or 6% from there. But again, nevertheless, we're still in this sideways consolidation. We still haven't broken the range. And the range I'm talking about is sitting between this lower range over here, 15,000 to 15,500 to 15,800, okay? And this upper range, which is sitting around 16,800. So we're still kind of bouncing between this range over here. We'll talk about what we expect next in a second. Moving on from there, we can see volatility is starting to come down. Of course, volatility is coming down as we start to see, lower and lower swings or smaller and smaller swings in the price action. We generally see volatility drop, okay? Volatility represents the speed and velocity of the price action. So generally when we have more momentum, more speed, velocity, we have larger swings, okay? Therefore, it's greater volatility. As we have these compressions between support lines, we generally condense and tighten the price action, volatility drops. So it's very normal. Now with decreasing volatility, price action consolidates, eventually volatility will spike and the price action will make a directional move. So we generally have these phases where we have, consolidation, then we have expansion, okay? Then we have consolidation, and then we have expansion, whichever direction we take. So we are looking at the volatility here, but again, the volatility is not going to be a leading indicator. It's not going to be a lagging indicator for the price action. It's going to be very much on the point. So 24-hour liquidations, 47 million. Of course, we are quite low for liquidations, indicating low volume in the market right now. Yes, it's good to see liquidations are low, but again, as we see volatility drop, liquidations generally do drop. Let's go ahead and take a look at the broader market. DXY did actually find some support down over here. This 105.3 to 105.7 zone has actually acted as support. And of course, we don't really know what the DXY is doing right now. It is a weekend, so the price action will not develop. But what we can do is we can draw some trend lines in and have a look. So where did it close? It closed underneath this diagonal. Breaking through this diagonal, of course, will enable the DXY to push back up to 106.5. And that is a pretty strong resistance level over here. So we can expect a retest of that. I'd expect a rejection through that level, okay? If we do reject from here, if we are able to break back up above there, I do actually expect a continuation back above this level, potentially taking out that high. So we do have a pretty strong directional move coming for the market. Again, we are in quite a delicate spot for the broader market, not just cryptocurrency, and we can go ahead and take a look at that now. So We are in a pretty delicate spot for Bitcoin and the total cryptocurrency market cap in general, because we are stuck between a major support level. Remember, this support level is super important, guys. So we lose the support level, we're going down like 200 billion on the total cryptocurrency market cap. That would take Bitcoin down to about 13.9, potentially a little bit lower. Okay, so a big move down coming. And of course, we have a massive market-wide rejection point, a 4 to 5 month long resistance level, pretty close above us over here. It's not too far off. It's less than 100 billion. It's about 50 billion away. So it is pretty close off. That will take Bitcoin to about 18,100 if we do push up here. So we are stuck between a major support and major resistance. To make a macro directional move, we're going to have to determine which way are we going to go. Are we going to go down, or are we going to go up from here? Until then, we are very much swinging in a sideways consolidation on the larger time frame. Okay, on the larger time frame, we are on a sideways consolidation right now between two major points of confluence. So again, if you're looking for macro plays, if you're looking for larger time frame plays, you're keeping an eye on these levels here. Dow Jones, again, in a delicate spot. We have pushed past the 34,000 level, a very key resistance level. As you can see, it's diagonal over here, was actually broken quite some time ago. But more importantly, this 34,000 level has been a horizontal resistance level for quite some time on the chart, as you can see over here. So we have broken through that. Technically, the Dow Jones has actually broken its downtrend. We have actually broken out of the bear market downtrend for the Dow Jones. We do not form a new strong uptrend unless $35,000 is reclaimed and pushed above. Until then, we can definitely reject in this level and head back down to these levels. We're looking at 335, 332, and potentially even lower. Okay, so keep an eye on that. S&P 500, not as good as the Dow Jones. We have not broken out of this bear market resistance, this bear market downtrend. Okay, falling, expanding wedge. We do need to break above this 4,100 level, this downward descending resistance to actually do so. Bond yields looking green on the last close, but overall still in a downtrend. And again, 2 years still in a downtrend. Bitcoin dominance looks like it did actually reject from the 41% level. Again, if this continues down, we'll see altcoins perform decently well against Bitcoin, which is actually what we have been seeing in the last 24 hours. We've seen altcoins do decently well against Bitcoin in terms of they're holding better on the drops and they're performing better on the rises in the last couple of days, and that is reflecting that. Anyway, guys, let's go ahead and get into the analysis for Bitcoin. So, as always, guys, let's quickly explain what we are seeing here in terms of ranges. So in terms of ranges, these red levels actually represent our zones. And of course, zones are support and resistance levels that span over multiple time price points. So the difference between a individual horizontal line, this is a resistance at a singular price point, and obviously a red level is a resistance throughout or between two horizontal price points. Okay, the whole area is a resistance. So what we're looking at here from a resistance support level, we're looking at a upper resistance here, a lower support here, and then a massive support zone over here. Okay, so for the next move to continue upwards, we do need to break above this immediate resistance, which is 16,800. That will allow the price action to develop and push up to 17,300. That is a pretty major horizontal resistance level, as you can see on the chart over here. Breaking through there will enable a retest of 18,165. 18,165 will enable the total cryptocurrency market cap, or will facilitate that same move will happen at the same time, a pushback in this range, which will reach that market-wide resistance. Once more, that 18,165 level is, of course, if we go to a smaller time frame on a 12-hour, we can actually see that level was a major rejection point on the Bitcoin chart right over here. We've seen multiple retests, multiple rejection supports on here, and even a rejection on that break on the 10th of November. So we do know this is a major trigger point for a continuation or rejection of Bitcoin. If we do push higher, I do expect this level to actually be retested before we either push through and delete this entire move and push upwards, marking that absolute bottom, or actually continue downwards to those lower targets. Again, we'll come back to that in a second when we do our larger time frame analysis. So we do have some very important levels above us. Of course, the 16,800 level is very important, but of course, more importantly, 18,165 is probably the most important immediate resistance for Bitcoin. For the downside, guys, we do expect a continuation back into the zone and actually down below the zone if we lose this level again. The reason being, if we lose the support, we do expect a continuation similar to here, and similar to here. And I do not think we're going to hold the support zone for a third time, okay? It's very unlikely we hold the support zone for a third time. It's much more likely that if we actually do retest the support zone here, we are going to be continuing upwards and through the support zone. So let's go ahead and bring back our diagonal levels now and talk about how these diagonal levels can influence potentially where the price action is headed. So what we can see a few things. Obviously, this diagonal resistance has been acting as a pretty strong resistance this entire time, since the 10th of November. We have actually broken above it. We have broken above it a few times in the past. Once over here, we break below here, and of course here. We've had numerous fake outs on the price action within this range. And the more fake outs we have, the more unreliable these trend lines do become. We have to keep that in mind. Diagonals are incredibly important on larger time frames. They are incredibly important on smaller time frames. But when there's a lot of volatility, particularly like over here, okay, and then we have these compressions and a lot of compression and low volume, we can generally see some fake outs above and below these trend lines. Therefore, we're looking at the immediate resistance to mark the reversal points, okay? Technically, we are above this trend line, but it's not going to be a strong enough confirmation as we've seen multiple fake outs prior to this. Therefore, we'll be waiting for a safer entry above this trend line for longs. Until then, we do have to be aware that this could potentially reverse back down, okay? So, confirmation, we have to wait for 16,800. So that's the shorter term analysis, guys, for Bitcoin. Let's go ahead and go to that larger time frame again and talk about potential directional moves on the larger time frame. But more importantly, I want to talk about what will it actually take for Bitcoin to create a new bull market uptrend. What will it take for Bitcoin to create a new macro uptrend? Where will Bitcoin actually need to reclaim to develop this uptrend? So first and foremost, we'll go ahead and drop our diagonal in, okay? And I'm just going to quickly explain this diagonal because I've had a lot of people ask, MegaWhale, why is this the diagonal level you're using? Why is this diagonal so important? We'll quickly go ahead to a daily and explain that. And I use a few different things to explain this, but I also utilize moving averages prior to, I guess, right now, what we've seen in the past. If you remember how moving averages have reacted in the past, it'll help you understand, I guess, why these points are going to be points of confluence or rejection on the chart. So if you do remember back in April, okay, if you were here in April, if you remember in April, that was when everyone started getting very bullish again. A lot of people were still in denial that we were in a bear market. And we're coming up on the 200-day moving average right there. I'm going to go ahead and actually bring up a chart really quickly. And I think this chart sums it up well. So it's going to sum it up a lot better than what I'm talking about. Here it is over here. So if you look at this chart over here, actually this one here. If you look at this chart over here on the daily, we had the 200-day moving average pushing up, and we actually rejected from the 200-day moving average right over here at 48,000. So coming back to the chart over here, we had that 200-day moving average push across over here, which was that 200-day moving average rejection. So we know that the 200-day moving average rejection is a strong point of confluence. We had a bearish divergence here. Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. Okay, and when we look at bearish divergences, the most important data point for a bearish divergence in terms of trend lines are generally that first top, not the second. The second is a discrepancy. It's an overextension based on momentum. This is generally used to indicate fake outs. So we take that first point, we take our second point, the 200-day moving average, we draw that diagonal line, and that actually meets up with here. And this is no coincidence, because if you remember on the 2-day chart, guys, that actual breakout over here, we did see a breakout. We saw a very small breakout. If you go to a total critical market cap, we would have seen over here again at the same time a very weak breakout above that trend line, incredibly weak breakout. But it was actually a 2-day rejection on the 50 EMA. Okay, the prior time we broke the 50 EMA, we pushed up and we got ejected from the 200. Okay, before that, the prior time we broke the 50, we went into a uptrend to the bearish divergence, which printed reversal. Okay, so the 50 is very important over here, guys, very important. So we do have a confirmed diagonal trend line. It's a confirmed diagonal trend line. So we know this is a diagonal trend line because we do have 3 points in a downtrend connecting. We can take that diagonal trend line and copy and paste it to the underside of this pattern to see where we have points of support. We have 2 points of support directly in between the 2 points of rejection. All right, just like that, creating a W shape. What does that indicate? It indicates we have created and we have actually confirmed a descending channel. Descending channels are downward consolidations which result in reversals to the upside. And that is in line with the fact that we have been in a downward consolidation, a bear market. So it's all adding up, it all makes sense. This pattern makes a lot of sense. So the question is, what will it take? And more importantly, where would we flip this downtrend? And when will we start a bull market? So let's go ahead and take a look. So before we do any of that, we need to go ahead and input the most important lines on the chart. And we're going to go ahead and draw in some of these important levels on the chart, starting up over here. So 23,800, this is our another low. This is a nice strong horizontal crunch zone over here. We actually faked out over here. We didn't actually push up, okay? So that is a very key resistance. We'll go ahead and pop some other resistances in now, moving up to start off with, and then we'll come back down. So very obvious resistances pushing up here. We have the $30,000 psychological resistance, okay? This is an individual resistance line. As you can see, it does span over here. So we do have a degree of variation on the 30,000, but all in all, that 30,000 is that horizontal resistance, a very strong resistance level. Pushing upwards from there, guys, we're looking at major rejection points next. So we're looking at 48,000. Of course, that was where that 1-day, 200-day moving average break actually occurred, and rejection. And we're not going to worry about anything above that, okay? Moving down, we do have a very strong support at around 18,165, and that level expands down to that June low, which was around 17,600. Very strong support level. Moving down from there, we're going to be taking a look at our 13,900 to 12,000 support. Okay, again, a pretty strong support zone. We can use a VRPV to quickly double check that. Absolutely correct. We see a gap downwards, a little chunk up before a huge chunk of volume, indicating we do have support there. Looking at the current price action, guys, this all lines up. We do have a pretty strong bit of support resistance over here. We have our POC line over here, so around 19,200. That's fine. Our support level just underneath it in this chunk. We do have a bit of support developing here, and we have a gap over here. So it all makes sense according to our volume ranges. These levels are very much relevant, and they have been confirmed. So what are we looking at for reversal here? If we go ahead and flip the chart, okay, this is really interesting. If we flip the chart and we look at it from this structure, at what point would you consider this ascending channel to be reversed? It's a rhetorical question I want you to answer in your head. At what point would you consider this descending channel reversed? The quick answer, the easy answer, is we would expect a breakdown, okay, once this level has been lost, a retest, confirmation. That would create a downtrend. This trend, okay, this trend would be completely invalidated once the price reclaims the lows of this level here. So we're looking for a break over 24,000 will confirm a continuation upward, okay? So what I'd be looking for, if we go ahead back to the standard chart, we'd be looking for a breakout of this descending resistance. We'd be looking for reclamation of this 19,000, 18,000 level, a push through $24,000. We've cleared this entire zone. We're going to be moving upwards to 30,000. Okay, that would initiate a brand new uptrend. a strong uptrend. The bull market, in my opinion, will start after 48k. If we push past 48k, whenever that happens, we will be heading to a new all-time high. I don't know where it's going to be. I'm not going to even attempt to make predictions about where it's going to be. Way too far ahead of time, but that is what I can say. Okay, so that is the upside on the larger time frame. On the downside, again, guys, we've already talked about it. We talked about it earlier. We use those smaller time frame indicators. We're looking for breakdowns of this support level over here. Quite a small support level. If we lose this level here, we can see one more push into this zone pretty much before January. Okay, so that sums it up well, guys. I think that sums it up well. And of course, one more thing, we talked about this yesterday. You can utilize that RSI on the weekly to help confirm that break out. Okay, the weekly RSI, we go ahead and draw our trend lines in, taking from the top over here, drag it across. We can see again, no coincidence, guys, the RSI confirming that rejection over here. Okay, we do have that falling wedge on the RSI developing. All right, quite a rough drawing over here. We can see this. We're waiting for a break of this descending trend line and a break of the RSI at the same time to confirm the breakout. Let's go ahead and move into the last part of our video. This is the difference between Bitcoin performance and altcoin performance at different phases entering the bull market. What performs differently? And we have to keep this in mind. The one on the left is altcoin market cap, so everything excluding Bitcoin. The one on the right is a total market cap, including Bitcoin. Okay, so what we're actually going to do. So we're going to go ahead and swap that to the Brave New Coin Liquidate. So Bitcoin by itself shouldn't be. We've got Bitcoin by itself. That makes more sense. Okay, so here's one thing I do want to point out before. Just because the data will reflect Bitcoin does historically significantly better at the start of bull markets and altcoins, and I'll show you in a second, it doesn't mean that you won't have a few altcoins there that overperform Bitcoin. Okay, it's just an average. There are a lot of altcoins, some do really, really poorly, okay? Some do really, really good. So it averages out. But yes, there are some altcoins that do phenomenal when Bitcoin's entering a bull market. There are some altcoins that do horrendous. We're talking about absolute averages. If you picked a random altcoin, what would be the average? This is kind of what this is going through. So if we take a look at the weekly on both charts, we'll go ahead and zoom out a little bit so you can see. We're looking for the point of which Bitcoin creates that breakout for the bear market, essentially. Okay, that entering a bull market. Enters a bull market over here, which is on the 19th of October 2020. That is when the bull market trend really starts to develop. If we go ahead and take a look at the altcoins over here, that happens on the 16th of November 2020. All right, so about a month later, the bull market initiates for the altcoins about 4 weeks after it starts for Bitcoin. If we take a look at the Bitcoin price action from this date range over here, from October, and we draw it up to that first initial high, okay, and that first initial high was over here, on the 4th of January 2021, we saw a 248% move. So we'll take this over here and we'll go to the 4th of January 2021, drag it up, we saw a 135% move. But this is where it gets interesting, guys. The moment Bitcoin sees that first top and drops back down, from that low, it creates a total move, and we'll take it to the absolute high, of another 138%. Whereas altcoins, from that point and drop back down, creates a move of 597%. So the moral of this kind of story is Bitcoin will always outperform altcoins on average at the start of the bull market until we get that first initial pullback. After that, altcoins will start to rally significantly as money now flows out of Bitcoin and into altcoins for basically the remainder of the bull market. Anyway, guys, I'm going to leave the video there. I hope you enjoyed today's videos. If you have any questions, leave them down below. Let me know if you want anything covered. Let me know if you want to hear something, you want me to do some kind of analysis. Let me know on the channel. And of course, we'll see you tomorrow. Cheers.